Welcome to Drill Down Earnings. We have quarterly results out from Salesforce, the occupants of the giant tower over my left shoulder here in San Francisco, in Shack 15, in the Ferry Building, where I cover 50 most important companies in technology. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. And Salesforce, certainly a really big, important company. Fiscal Q2 earnings for this company, fiscal Q2 2026 numbers. They beat their guidance. They beat Wall Street's estimates. But let's dig a little bit deeper here. So second quarter revenues of $10.2 billion. That was up 10% on a year-over-year basis. It's the first double-digit growth we've seen for this company, but sales growth has been kind of flat for quite a while for Salesforce here. We'll dig a little bit deeper beyond the headlines. Operating margin is getting a little bit better, 23%. That's a good thing. But they would like to be doing even better operating margins. It is a software company, after all. Operating margin specifically 22.8%. But 10 quarters in a row consecutively of steady growth, improvement in operating margins, not bad. When we think of this business, it's very different from old Salesforce, which was just, customer resource management software, mainly through acquisitions. So they've got 5 big components: sales, service, platform, and others, marketing and commerce, and data. So sales is a sales cloud. It's OG Salesforce. Service is their service cloud, which is software for customer support, case management, contact centers, field service, also a long time offering for these guys. But then come the acquisition. So marketing and commerce, the marketing cloud, the account management, Pardot, that business, their commerce cloud for digital marketing automation, as well as personalization and e-commerce businesses. Their data business, their data cloud, their customer data platform for unifying data. That becomes really important going forward for 2 reasons. One is because AI, of course, and data management is such an important part of AI. And also their pending acquisition of Informatica will change that data business. And finally, the platform business. It's the smallest business, but it's 14% of revenues. Platform and other is a Lightning platform. The MuleSoft acquisition, the Tableau acquisition, the Slack acquisition, and smaller products like Heroku and Quip, those are taking off. And we look at 19% growth after the acquisition. That's a really positive sign, I think, for this company, not just because it's the fastest growing segment of revenues, but also because it shows that Salesforce can take in these businesses that are doing okay and really accelerate the growth once they're in-house here. And so that's been really positive for these guys. That platform and other business up $2.08 billion on a year-over-year business. And it was on all of their top 10 Q2 deals. So they also closed 60 deals over $1 million each, involving both their data cloud and AI. 40% of bookings from existing customers expanding their use. And I mentioned the data business. The data business is seeing 13% growth. Again, double-digit growth, growing faster than the rest of the company, with the Informatica acquisition about to pile on here. Now, there was a time when customers were stretching out their deals where the total RPOs were growing a lot faster than the current RPOs. And while that is still the case, the gap has narrowed where current RPOs, that is revenues coming into the next 12 months, doing a little bit better, 9% growth. RPOs, of course, remaining performance obligations. And the balance sheet, I think, I'm going to say it looks clean here. Day sales outstanding are in line with what they have been for quite some time, creeping up a little bit, maybe, but nothing real problematic here from the look of those numbers. Their guidance was, however, not great. It was better than my estimate for the full year, but they guided to $41.2 billion for the full year. And while they're raising that guidance, as well as their non-GAAP margin guidance, and their operating cash flow guidance, it was less than where Wall Street was sitting. Wall Street had more optimism than I had, I guess, going into this quarter. And the stock sold off, stock down 6% in after-hours trading after rising only 3% for the year. So now after these results are out, Salesforce down in the calendar year when we have the S&P 500, as I look at my screens, up 17% in the last 12 months. So they have really rounded out their offerings, balanced offerings, but nothing is going gangbusters here. I mentioned the really strong growth in the MuleSoft and Tableau and Slack business. But other than that, nothing's really doing great here. It's good, slow and steady. That doesn't always win the race in technology. Here's CEO Marc Benioff.
We can see crystal clear that Salesforce has the opportunity to do exactly what you're saying, which is to reduce everybody's support costs, to make everyone's sales organization a lot more productive, to make everyone's marketing have a much higher ROI, to make every field service technician a Superman or Superwoman, and to make every Slack user far more empowered in their organization than ever before. And I could go on and on and on. And why others are not doing this yet is, I think there's, maybe it's threefold. One is timing, like I'm saying. Two, it could just be, there's a lot of nonsense, which is like, there are very smart people in our industry and other executives who are saying absolute nonsense. And I don't understand why they're saying this nonsense. Maybe it's just to create a certain level of FUD in the market, but I think it's inappropriate at this point. And what it's done for the whole enterprise software industry, I think, is crazy. And I would say the third thing is fear, because I think with fear, all of a sudden, as soon as you start to say, I'm going to make some dramatic change, but let me make one thing crystal clear, which is that the agentic enterprise, unlike every other kind of technology value proposition that we've kind of prophesized for the last 26 years, the one big difference is not only is it a radical technology transformation, as I articulated, humans and agents working together, it's also a radically different organizational transformation involving what the structure of your company looks like.
All right, so there you have it from Marc Benioff. But what's it all mean? What's your drill down earnings takeaway? The one number that tells you a whole lot. Well, I'll tell you that. But first, I do want to implore you, if you're watching here on YouTube, subscribe to us, or if you're listening to us on Spotify, or watching us on Spotify, or listening to us on iTunes, whatever. Subscribe to our shows. It's how we know that you're out there and how we're able to provide more of this content going forward. So please take just a second, click on that subscribe button. Let me get you that drill on earnings bite, the one number that tells you a whole lot. So Salesforce Q2 earnings. Here's what you need to know. Your essential summary is, if you want to remember this, $10.2 billion in revenues, 10% growth, a little bit better than it's been, double digits, I guess, but not great. The drill on earnings bite, the one number tells you a whole lot, is, however, some really strong growth in their platform and other business. The number, $2.084 billion in revenues in the quarter for the platform business that includes MuleSoft, Tableau, and Slack. That business going really well and growing faster under Salesforce than it was when those businesses were first acquired. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson. And yes, follow me at X at Cory TV and subscribe to us wherever you're listening to us or watching us on TikTok, on Instagram, and yes, on YouTube.